This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Here again are your TF Metals Report podcast highlights for the week of January 29th through February 2, 2024. Again, a daily podcast is part of what you receive as a member of TF Metals Report. And these highlights are just a small snippet of what we discussed each day. Just giving you a feel for how it works and what some of the discussions are on a day-to-day basis at TFMR. Back on Monday the 29th, we didn't know where the week would head. We knew we had a lot of economic data. The January FOMC was due to be done. And, of course, we're going to have Jerry Powell's press conference after that. And also then we'd finish the week with the latest jobs report. As the week began, COMEX Gold was once again under significant pressure early in the COMEX trading session, falling sharply between about 8:30 Eastern and 10 o'clock Eastern. Silver fell sharply too, but silver then bounced back as the day went along and actually turned positive. Much of that is due to the current commitment of trader structure in COMEX Silver, where the hedge funds and other large speculators are actually net short COMEX silver contracts, meaning that the bottom is likely in, and maybe that's what we saw back on Monday, January 29th. All right, then just to your charts. Again, intraday, this is COMEX Gold. This was this is actually the February contract on this chart. Again, going off the board tomorrow. See the volume spikes? Okay, we had a nice little rally at the COMEX Open because everything's going on in the world. Right there, 7:20 Central Time for this chart. And then plungerama. Look at the volume spike as you're just unloading those longs off the spreads. Bounce back and then into the COMEX close at 12:30. Straight down again, like I said, layered sells. 20, 30, 40, 20, 40 at every 10 cents on the way down. Okay? All right. Notice how that compares to silver, which dumped at the same time, just like gold, beginning basically right at the New York Stock Exchange open of 8:30, bottoms out, and then rallies all the way up to new highs for the day. Completely different from gold. Think all the tick-for-tick charts? Not today, because gold, again, being manipulated for profit by the bank trading desks. Tuesday in London, physical trading only gets smashed in paper trading on the COMEX. Now, much of this driven by economic news that usually comes out early in the American day. But that is what it is. And the chart is the chart. And you can clearly see the smashes on this chart of COMEX Gold. It's the last 10 days of COMEX Gold. Okay? Eastern time, the COMEX opens for gold at 8:20. These are hourly candlesticks. Okay, so where I point and say this is 8 o'clock Eastern, these are the hour candlesticks of the time, the hour that the COMEX opened. 8 days out of 10. 8 days out of 10. We've seen smashes. I didn't even put one on here. I should have put one on the 18th too, but we just quickly reversed and went higher. And the only day we really didn't get smashed at the open was on the 23rd. And that was only because we got smashed during the London Monkey session. You see that before that? Other than that, basically every single freaking day for the last 2 weeks, we've been smashed right at the COMEX open or shortly thereafter. Like today, the smash was 90 minutes later, 100 minutes later. But most of the time, it's been the 7:30 data, Central, 8:30 Eastern data, that has smashed price, spike the dollar, rate cut expectations, and all that. Okay? Now, the good news on this chart, as you can see, even with smashes on 8 or 9 of the 10 days in a row, price is unchanged. Smash it in New York, rally back in Asia. Smash it in New York, rally back in London. Smash it. Physical buyers in Asia, London, paper sellers in New York. The good news is, it's got to be frustrating if you're short. Wednesday, the 31st, brought the conclusion of the January FOMC meeting, what we call the Fed lines at 2 o'clock Eastern, and then Powell's press conference at 2:30. It ended up being a negative for gold and a positive for the dollar. when Powell muttered his words that a rate cut for March was not the base case. Okay, fine, whatever. March is a long ways away. We'll worry about that then. What we did also on Wednesday was end the month of January. Yeah, the year's already 1/12 over. And we painted the candle on the monthly chart. Now, price was down for the month, but not significantly. And more importantly, price finished above $2,000 an ounce on the spot chart for the third month in a row after having never done it before. It's important for the long-term trend, and that's all part of what we discussed on Wednesday the 31st. The gold on the monthly chart. Again, I like to use spot for these now because it's the clearest picture. We don't have a bunch of goofy candles, with contracts and continuous and all the other stuff. And this is just 10 years, so you can get a real feel for what's happening now. We don't need to, where price was in 2011 for gold and silver. Let's just look at the pending breakouts and what we're watching closely. The gold one's the most impressive because you can clearly see on a monthly basis 1, 2, 3, 4, 5, 6 times intra-month gold traded above 2,000 but never closed above 2,000 on a monthly basis. Finally, though, in November, we got above, and now this is 3 months in a row that we have closed above 2,000 on a monthly basis. You could even say the last 2 months we've used 2,000 as support. Okay, looks okay. And again, the way gold is holding in there, once the Fed does pivot and begin to cut, that's when we should begin to rally, finally get above 2,100 and make that $2,300 goal this year. Yes, gold fell after that FOMC meeting, but you know what else fell? Interest rates. In fact, the yield on the U.S. 10-year note fell sharply on Wednesday and again on Thursday. What's going on here? Yields back to some of the lowest levels seen since late December. Those yields were set to reverse on Friday. However, it did provide a nice base of support for some buying of COMEX gold futures on Thursday, and it certainly had our attention. Okay, here's that chart of the yield on the 10-year note. Again, going back to just, late last week? 415. Today, hitting 381. The wiggles yesterday when it was briefly back over 4 right after the Fed lines. And again, falling today to 381 and then kind of holding in here now, 387. This is the bond market calling bullshit on Powell. Oh, yeah, higher for longer, huh? Okay, well, maybe, but you're only making things worse just like you did a couple years ago. And on Friday, February the 2nd, hey, it's Groundhog Day all over again as a amazingly stronger than expected U.S. jobs report leads to a smashing of the COMEX metals. Gold at one point down almost $30, recovered to be down about 17 or 18 by the time of the COMEX close, and actually posted a green week, up about $18, $19. We'll see where things close by the time we wrap up the day at 5 o'clock Eastern. So we still had a good week, just a frustrating week with the way that it ended. My question for you, my homework for you this weekend, do you do your own homework? Do you make up your own mind? Do you do your own research? Or do you just follow along? Do you just listen to the mainstream media? Do you take the headline that you read or that Lester Holt tells you and just take it on faith that that must be true and accurate? If that's the case, knock yourself out. Be a useful idiot, as the party likes to call people. Or my challenge to you is to educate yourself. Spend some time this weekend on Twitter, perhaps. Google the U.S. jobs report and learn how it is done. How do they calculate these numbers? It's only the 2nd of February. How do they know that the U.S. economy added 333,000 jobs? And what kind of jobs were they? Are they full-time jobs with benefits like health insurance? Or are they part-time jobs? And how many full-time jobs have been added in the last 12 months versus part-time jobs? Are you willing to do that homework? Are you willing to educate yourself? Or again, are you just going to toe the party line because it benefits your political party to say the economy is strong? Or are you going to protect yourself? See through the lies. Understand what's coming because Mother Nature, economically speaking, will bring her wrath, and there will be a reckoning. It may not come before November, but there will be an economic reckoning. You can't just simply pretend that things are okay and talk it into existence. Your only protection from this madness is the ownership of physical gold and silver. Sound money. Have been sound money for millennia. If you don't own any, you should buy some. Central banks around the world are converting dollars into gold. Why wouldn't you do the same ahead of what will be an economic comeuppance, conflagration, reset, whatever you want to call it? The lies that you got today are just a part of trying to extend the game as long as possible. Thank you for listening to this week's podcast highlights. Again, a daily podcast, just part of what you receive as a member at TF Metals Report. It's only $15 a month. So what, 50 cents a day? Educate yourself. Don't just take what I say as gospel. Educate yourself. Let TFMR be part of that education. Come join us. We'll be happy to have you there. Again, everything can be found at tfmetalsreport.com. Have a great weekend.